following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the March 14th terrific Thursday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today, folks. And my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So let's go take a look at one of our tools. This is the tool. I love this tool. This is the tool I call the power of focus. You know, focus is the ultimate power. And focus, folks, can change the way we think, change the way we feel, and change what we do in any given moment. We change our focus. We change our lives, folks. That is the beauty of the power of focus. When we change our focus, we determine the direction that we will go in. If you want to achieve a more fulfilling life, if you want to just simply, live up to the potential that you want to live up to, I'd write down these four things, these four steps. There's really four steps in order to be able to help you to channel your focus. Number one, write down 2 or 3 things that you often focus on that make you feel stressed or overwhelmed. You see, the first secret to creating any kind of changes, what I call awareness. So what we want to do is find out what we're currently focused on, mainly things that maybe are creating fear or stress out there. So just write down 2 or 3 things. Number 2, write down 1 or 2 things, maybe 3 things that you don't have a real sense of purpose for, things that don't really juice you up, or things that you're doing today that won't really help you achieve whatever the outcome is that you want to achieve today. You see, the way to get more time and the way to get more emotion is to get rid of the unnecessary things that steal time from us. Time is limited. Step number 3, write down 1 or 2 specific outcomes or results that you want for your life. Now, I say just simply start by taking a look at what is it, 1 or 2 things that you want to be able to do today. Things that if you were to achieve them, well, they would actually juice you up. The key is to focus, folks, on what it is that we want. And lastly, write down what it'll cost you if you don't take the time to do these first 3 steps out there. What it'll cost you, what it'll cost your family, your friends, your coworkers, your career, things like that. Better yet, let me state it normally the way that Stevie would state anything, which is in a positive way. Write down what you could have if you did achieve those outcomes that you would write down on a piece of paper. 2 or 3 things, just 2 or 3 things that you want to be able to achieve today. What are all the things that you could provide to everyone in your life just simply by accomplishing those couple of things today? So those steps again, in order to design the life that each of us deserve. What are you focused on that stresses you? What do you do during the day that doesn't really help you to achieve your outcome? What are your outcomes that simply could change your life, that certainly could change your day out there? And what will it cost you if you don't achieve your outcome in life, folks? The ultimate power in life is the power of focus. So let's go focus on these markets out here. Right now, we've got the Dow futures trading out at 14,415, up about 17 points right now in the futures marketplace. S&P futures trading up 3 points out at 1553. NASDAQ futures up 9. You got Apple, looks like it's going to pop just a bit this morning here. And NASDAQ futures trading out at 2802. King dollar on the move, up about 12 ticks right now. Euro pulling back. Currency market relatively quiet, but we'll still go out and take a look at the currency market. Gold trading down $8 right now out at 1579. Silver back a bit more, off 35 cents. That's off about a little over 1%, 1.25% out at 28.60. Light sweet crude kind of flat out there, down 13 ticks out at 92.39. Across the pond here, you've got the DAX. DAX is doing very well. DAX, we'll take a look at that chart. It is forming an A to B equals CD up that should be completing in the near future here. DAX right now up about 1%. That's up 75 points. The FTSE up 27 points, 0.4% over in Asia last night. They were having a party. The Nikkei up another 1%, up 141 points. The rest, the Hang Seng and the Shanghai, both up about 0.3%. In the case of the Hang Seng, up 62 points, and the Shanghai, 7. Our call-in number is always 877-927-6648. Would love to hear from you. Give us a call, folks. And if we go start off by taking a look at the S&P futures. I've got the ES Mini up on my screen here. We can see that coming into the 8 a.m. Time frame here. The 8 a.m. Let me make sure I've got the right. Yeah, the 8 a.m. time frame as the ES Mini got up to a high of 1554.75 out there, moving towards the top of that relative strength indicator, pulling back a bit right now. We had jobless claims out at 8:30 this morning. They fell by 10,000, down to about 332,000 out there. Didn't really put a lot of energy into the marketplace out here, so needs to work off this overbought condition, maybe move sideways, maybe a little bit of a pullback here. That is on the 30-minute chart. Let's go take a dive into, actually, we're not going to dive into, we're going to take a look at the larger term picture. Let's go take a look at the daily chart on the ES Mini. We can still just trying to shoot for that 1556.25 level. What do we have up there on the futures contract? That will go ahead. Excuse me. That'll take us back into the October 2007 swing point out here. I'm going to go ahead and pull this chart back. It'll take me just a moment to, to do that. And I'll give you both the high and the low here. I'm going to take a little sip of water for just 1 second. Just simply, I don't think you want to hear me cough, nor do I want you to hear me cough. The October 11th high out there is actually 1586.75. 1556.25 is the low. Yikes. And so that is what the ES Mini is shooting for. I suspect, that we will see that get hit today. No reason that it can't. It's really just a couple of points out there. So that's what the ES Mini is doing as I try to navigate myself back here, of course, at that level, trying to break out of this 1.618 butterfly sell pattern. And if it's the 1556.25 and comes back in, it's still inside that range out there. And that is what the ES Mini is doing. That's really what the marketplace has kind of been on, a little bit of a stall pattern here. If you take a look at these small-bodied candles, even inside the ES Mini, last time we saw any kind of real energy was on March the 5th out here. Other than that, kind of really just sideways, little crawling up there, and the market's just trying to figure out as the S&P goes after the October highs, as the ES Mini goes after its October highs. What are they going to do? Are they going to go ahead? Are the bulls going to rush in and take over and close over the 2007 highs? Are they going to reject it? And that's where, that's really the decision-making process going on in everybody's mind out there in the marketplace. And so we know what the first target here is on the ES Mini, on the daily chart. And really it's the S&P that needs to prove itself. Why? Well, the Dow has taken out its highs for sure, continues to make higher highs. We know the Russell 2000 has done that as well. If we take a look at the NASDAQ out here, the NQ, we can still sticking in this 0.786 Gartley sell pattern out here, trading out at 2802.50. But what we do know also about the NQ futures, really strong support so far down at that January 2nd level. The low there is 2686, the high 2742. We'll put a line across the top of that here. You can see that level hasn't been touched. The high I'm referring to hasn't been touched. It's kind of been jolted out of there on March the 4th. So after March the 4th. Now, if this pattern here fails, you'll see the NASDAQ futures run all the way up to the September 21st level. That'll put some energy in the marketplace for sure. The NASDAQ futures would head up into the 2852 to 2871 range. But because this 0.786 pattern really worked here, what it would more likely do is set up a butterfly expansion pattern, because when these 0.786 Gartleys fail, oftentimes they will turn into an expansion. An expansion on the NASDAQ futures, well, that takes it all the way up to about 3,029.75 out there. But one step at a time is how we've got to take a look at things. It popping in the market right now. Apple is the leader in the clubhouse, trading out at 432, closed out at 428 yesterday. eBay, we'll take a look at the eBay chart in a while as well. That has been pulling back, I believe, into a gap area. Closed out at 50.98. Right now, trading out at 51.80. So up about a buck out there. JCPenney having an unusual morning. I see it's on the actual plus side of my screen. JCPenney closed at $15.65. They're trading out at $16.08 right now. Leading things down to the downside here, you've got U.S. Silca Holdings, SLCA. Down slightly. They close at $22.79. It's off about $1, trading out at $21.80 right now. E-Trade, ETFC, they close at $11.82. That's trading out at $10.99. So not a ton going out in the marketplace just yet, but as we come, let's go take a look at what's going on around the globe here before we start taking a look at those charts as well as some of the currency charts and commodity charts. But let's go peek around the world. Let's start off by looking at the DAX. Now, if you're watching us on Tiger TV, you're seeing the screens that I've got. Maybe you're listening in on the radio or your mobile device at tfnn.mobi, and that's a beautiful thing. Thank you for doing that. Remember, you can catch the archive of this show on Channel 9. More importantly, if you've got one of those smartphone devices or tablets, this show actually streams live. And you can do that by going to the homepage at tfnn.com. Over on the right-hand side, you'll see a little button with 3 smartphones. Click on that. You will get this. You'll see the chart right now that we're looking at, which is the DAX. We're looking at the weekly chart. We're seeing a 1-to-1 A to B equals CD that would complete on the DAX at 81.39. Right now, the DAX is at 80.44, so up about another 90 points or so at 81.39. As you take a look at the chart here, talk about some harmony in the markets. The DAX would then be taken all the way back to its highs. Its highs, July 13th, 2007. 81, 51, 57. If our markets can do it, the markets in Germany can do it as well. That is where the DAX is headed to. Just up above that level at 83.17. So another couple of 100 points above that. Create a 1.272 butterfly expansion. 877-927-6648. Hope you're having a terrific Thursday. I know I am. Thanks so much for being here, folks. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Welcome back, folks. And folks, if you are anywhere near the San Mateo area, anywhere in San Francisco, San Jose, what you want to do is come over to the homepage at TFNN.com. This coming Saturday from 8:30 to 12 noon, Tom O'Brien and Daryl Martin will be hosting Dynamic Trading Strategies. It'll be a terrific workshop. Not only are you going to get a great education, folks, but you're going to likely walk away with some prizes. 30 prizes, folks, worth over $2,500, just simply in addition to the great education. The education you're going to get is going to be worth way more than any of the prizes, but it's nice to know that there's some prizes as well that will be given away. Of course, there's 30 prizes, so you've got a good chance of getting in on that action. Look, if you are anywhere near the area, it'd be a great way to spend your Saturday morning. All of the details on the homepage of TFNN.com. You know, yesterday morning when we were taking a look at charts around the world, the chart that was showing the most weakness was the FTSE. And the FTSE, reclaimed most of its losses, more than half of its losses by the close of the session here. It did form a bearish engulfing, but not anywhere near what it was trying to do as we were on the show. And you can see that bearish engulfing being erased today. Does still have a resistance area of this 1.618 butterfly pattern, but the expansions going on in this marketplace truly incredible out here. The FTSE just simply no bears. The bears were out yesterday, and they just simply got trampled over, even inside the FTSE out there. If we take a look at, as long as we're in my chart area here for the worldwide patterns, let's go see. Let's take a look at the Shanghai out here. Does look like the Shanghai wants to get back and test at least the, this is where it broke out, just simply taking a look at the candle structure out here on January 14th. That is the most that's the most bullish candle right now on the chart, other than coming down and testing the gap area left out here from December the 21st. 24th or so. If we do take a look at A to B equals CD down patterns here, let's see how much further it has to go in order to complete just the small one that is out here. The small one would take you really right back to the top of the gap here. So it looks like what the Shanghai is shooting for is the December 26th area, December 26th low, right around 2310.79, 2312.80 would complete a 1-to-1 A to B equals CD. You know, yesterday, if you were listening on the show, one of the things we were taking a look at really was the currency marketplace, because the currency marketplace was the one that really had the largest movements in them. We'll start off with taking a look at the Japanese yen. Talk about the yen. You know, this thing is on a roar higher. Right now, it looks like it wants to make a 1 to 2.618 A to B equals CD pattern. If you're watching us on Tiger TV, that pattern here beginning at the lows. This is a monthly chart we're looking at. The lows of October 2011, 75.55. That's your A point. Your B point out here is the swing point from March 31st, that high, 84.17. Does your normal pullback, does a 0.618 or 786 retracement back into September 30th, 77.12. I don't suspect we will see those lows at all, perhaps, at least for the next many years to come. Now, on the monthly chart, that's what we're looking at. You can see price here moving into that overbought territory, even on the monthly chart. That takes quite a price movement in order to do that. You can see also the trend line coming off of the highs that go all the way back to when the yen-dollar, U.S. dollar-yen, was trading out at 147.66 out there. That trend line was broken once. It turned out to be a false break. That first break took place back in December of 2006. Price moved back down inside it in November of 2007. That trend line has been broke this month right here. Looks like 100. Looks like the yen wants to get to par 100 out there with the U.S. dollar. Now, the currency chart that we were really taking a look at yesterday was the pound. So let's go back and we'll take a look at the Great British Pound out here. The bulls absolutely trying to now take control of the pound. And the pound had been pounded. But the beautiful thing about candlestick charting is it tells you where the bulls are. It tells you where the bears are as well. And it makes trading a whole lot easier. Makes it less emotional because the emotion is really all in the candlesticks, and all you have to do is just a simple interpretation. Well, in the pound here, it formed a nice little hammer candle. That hammer candle was on a Tuesday. You see that hammer candle. Then you had confirmation of that hammer candle yesterday. You got a bullish engulfing. You can see the pound here on its way up. This, folks, is a good trade, good currency trade out here. Why? It's great reward to risk. Your risk is a close below 1.4830 there. It is a nice reward to risk trade inside the currency pair for the Great British Pound. If we pull up the euro here, let's pull that up real quickly. The euro U.S. dollar, that's also trying to come and make a 0.786 retracement. Really, really close to doing that. We come back, we'll go take a look how these markets are going to open. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 38 points, trade out at 14,493. Composite up 9 points. S&P up 4 out at 15.58. The small caps up about 0.2%, up $1.80. Google up 35 cents. Apple up $4. Trade out at 432. Looks like it wants to go attack that 435 level again. Intel up 11 pennies. Cisco up 16. Popping to the upside right behind Apple. You got Men's Warehouse up 10%. MW is the ticker symbol. We'll certainly take a look at that. They must be out with earnings. Let's see if I can grab their revenues here. Looks like sales of $2.5 billion, $2.49 billion versus $2.38 a year ago. Net sales, I want to see the net income out here. Where is the net income? That was net sales for, don't see the net income here popping out at me, but they're having a nice morning, up 10%. LinkedIn Corp, LNKD, having another nice morning, up about 2%, up $3. EBIX, EBIX, up $1.40. VMware up about 70 cents right now. eBay up $1.60. I do want to take a look at the eBay chart. Amazon leading things to the downside. AMZN off only about 2%. That's down about $6, a little under $6. Vera Bradley, I think the purse maker out there, VRA. I'm sure they make more than that. Down 7% off $1.81. I don't see the. Let me see if there's some news, maybe some revenues. Let's see here. They were out with earnings. Their revenues $120 million versus $122. Consensus was $132 million out there. The net income increased 25% to $25 million. Looks like they've got some good controls, good cost controls out there, but getting a little hammering this morning. You've got Zimmer Holdings as well. ZMH, they're off about $1 and change out there. Other than that, not a lot really in a pop to the downside or to the upside. Let's first check in on Apple. See what Apple is doing here. Trading out right now at 432. You can see Apple continues to trade into that resistance area, and that's going to be that's a strong resistance area. Been tested many times here. I'm referring to, folks, is the low of January 25th, that 435 area. 43 million shares now broke through that area on light volume, most certainly. And each time up, it's also been on light volume, not being able to hold that level. The only close above 435 occurred on March the 11th. 16, just a little over almost 17 million shares. And then just post-haste, the very next trading session, back below with 16 million shares. Yesterday's total volume, 14.4 million shares. It didn't make it all the way up to 435, made it to 434.50. This morning so far, the top has been 433.89 out here. So, Apple just having some light volume down here at the bottoms. Let's go peek in on some of the other charts out here. Google. Let's go see what Google is doing. We've been paying attention to Google because Google has had some strength out here. Now, Google came back. Let's see if it actually touched it. And what I'm referring to is the March 4th high. That high is 822.84. And yesterday got down to 822.31, closed back above it. So what you have here is what we'll see if Google is able to create this little support area, support 2 we'll call it. That is the gap up from March the 4th. Volume there, 2.7 million shares. The pullback yesterday, only 1.6. But remember, the benchmark on the gap is really the volume from the gap up day, and that was on March the 5th. That had 4 million shares. So Google doing a nice job of pulling back into, and also as we take a look at the daily chart here, what we can see is it popped up, nice relative strength there, gets into the overbought condition, and just simply has been moving sideways since March the 6th out here, moving sideways to slightly lower, coming back and testing the top of that March 4th candle. You'd like to see a test of at least 3 trading sessions to really set up a nice little support area, and it looks like maybe we'll get another test of that today. Trading out right now at 825.03, low so far 824.17, so it has just a couple bucks lower to go to make another test of that area, and that is on Google. Let's go take a look at some additional charts. Haven't taken a peek in on Chipotle in quite a while. I think I've finally got the name of that down. Chipotle making it back towards this little draft, this downdraft, severe downdraft out here from going all the way back to July. So nearly, what does that make it, about 9 months ago or so? July 20th, 2012, had a gap down, massive volume, 9.8 million shares. The top of that is 335.80. There was a little bit of a break above that level, and that was back in the September 2012 time frame. Came back down inside the bottom portion of this range here. Actually went to a lower low with some additional volume, almost 6.5 million shares on October the 19th. As Chipotle made its way up here most recently, March 6th, 341,000 shares. At 341, even going against 787,000 as Chipotle moved back down underneath that downdraft candle, which had 9.7 million shares. So just not enough volume at all inside Chipotle out there. Let's go take a peek in. I wanted to look at eBay, all kinds of charts to actually take a look at. And if you'd like me to look at one for you, just give us a call at 877-927-6648. So let's go take a look at the eBay chart because it's been a nice equity out here. Right now, what it is doing, this candle here shouldn't be here. You can see it's really a duplicate. This is January 1st, so we'll just leave it in here. We know the market was closed on January 1st. But what happened yesterday looks like that first window has been repaired. And what I mean by that is if we take a look at the candle from December 31st, the high there was 51.19. The very next trading session, when we come back into live trading on January 2nd, it gaps up, does it with 13 million shares. Now, the breakout session had 7.5 million shares. There first was a test of that area on 16 million shares 2 trading sessions ago. So coming back on more volume, not a good sign here as you come back to repair or you come back to test a little support area of a window because really you're benchmarking it against the 13 million share day on January 2nd. Yesterday, you had additional selling pressure and more volume to the downside. Now 19 million shares, and it closed just into that candle from December 31st. For me, once you do that, that really then fails as what I would be looking at as a support area. Now, I'll give something 1 day of play, just like if we were to take a look over at the Qs. The Qs have the same thing, so I use it as a guideline with just a little bit of a stretch there and give it 1 day of play there. And in fact, at this stage here, eBay, has gapped up this morning. When I say gap up, I'm just really now referring to the close of yesterday. It's still trading with inside the bar of yesterday. But what we are starting to see is volume pick up to the downside versus on an now. What you can also look at on that RSI indicator as eBay was coming into this gap, coming into this area, which was support, and I'm going to still call it support for at least one more trading session out here. You can see getting to the bottom of that relative strength indicator. We know that it's got to work its way off from that, so a little bit oversold out here. But volume-wise, this actually is saying that it wants lower price. Now, if we take a look at the B point here on this, that would be February 26th. So let's go check that out, 8.4 million shares. And as the B point was across 8.9 million shares. So now you've got a confirmed A to B equals CD down with inside eBay, and it probably hasn't had a confirmed A to B equals CD down in close to forever out here. So yesterday also forming a 1 to 1.272 A to B equals CD down. Looks like probably just simply off of the lows from December 31st. Looks like might be a little Gartley pattern out there. And it is. It's really a 0.786 Gartley buy pattern. Remember, when these 0.786 Gartley either buy or sell patterns fail, they typically turn into expansion patterns. So what we can then look at, because volume here is telling me that actually eBay wants a lower price. Now, we'll continue taking a look at this, but let's go tell what we can do ahead of time as we can figure out where that failed 0.786 Gartley buy pattern would move to, and that would be either the 1.272 or the 1.618 level. We can even draw that on our charts out here ahead of time, or at least you can mentally draw it. We may not have the tool that colorfully draws it, but you can certainly do your expansions and contractions of swing points and really be able to generate the same type of thing. Here's what that 1.272 butterfly would look like, and that would take price down into about the $47 area inside of eBay. Of course, a nice trade would really be if it ever came all the way back, and that would be the 1.618 butterfly. That would take you to 44.22, and at 40, let me see here, at 40, the low of July 19th out there, which is 43.25, anywhere between 43.25 to 44.44. That would be a volume permitting, meaning that you wouldn't want to see an acceleration of volume coming into that area. But on the right volume, that would set up a very nice buy inside of eBay out there. So I'd keep that one on your watch list for sure. That was on eBay. Let's go check out the Men's Warehouse. I actually haven't been inside a Men's Warehouse, but the guy does a pretty good job with commercials, and looks like he's doing a decent job here in running the company. But let's take the stock chart back and let's see what it is that we see out here. MW is the ticker symbol. And so this is kind of interesting. It has a high volume high, and then it has sold off. Now, it's sold off, and it got down below the area where it broke out, but still has a nice high volume, untested high out here. And I'm looking at the trading session from September the 6th. But let's pull this back even further. Okay, that's what it was going into. Well, it had an untested high, but that was coming into an area where it had broken down and had more volume to the downside. That was on June the 7th. So let's go take a look at this little stock out here that is full of gaps, and these are gaps that just simply don't hold. So here's a stock chart with gaps that, to a certain extent, are somewhat meaningless. And we'll start by first just taking a look at that before we go to the long-term chart. Take a look at the sign of strength on this equity on December the 7th. Gaps up with 4.3 million shares. You know, a nice buy might be coming back and testing that gap. That should have held as a support level. But no, instead of holding as a support level, you had the volume come out of this thing as it came back to that area. 6.4 million shares was going against a move up with 4.3 million shares. That's not a good sign. Finally, forms a little bit of a bottom by testing a swing point low. And that's why, you want to take a look at these gaps. You want to understand where the swing points are. Let's go ahead and put a line across the screen here. We take a look at Men's Warehouse. Let's go take a look at the volume. Now, the swing point we're looking at is October 4th, 2011. Does that sound familiar to you? It should, because October 4th, folks, you got June 4th, you got October. Those are pretty significant bottoms inside the marketplace. As we take a look at this equity, as was coming back into that level, was doing it on a much lighter volume. You can see the red line going across the bottom of my screen. And for those of you listening on the radio or what have you, the benchmark we're using here is the volume on October 4th, which was 1.2 million shares. Well, as this finally pulls into the swing point, it's doing it with 345, 287, 234, 451, and then finally 632,000 shares. No way. Did not have enough volume to bust it down. Remember, it was going against 1.2 million shares. Now the problem with this equity, not that, so you had a nice test, but, I don't know that I would have taken a trade because you would have had to have done the reward to risk on this because your target for resistance should have been that downdraft day from June the 7th. Big, huge gap there, and the top of that is 30.43. So I don't know whether that would have set up a nice enough trade because your stop would have had to have been underneath the swing point from October 4th. Your stop would have had to have been below 24.50. So likely that would not have set up the proper reward to risk. Nonetheless, it rejected that area, goes ahead, moves higher. Then you've got a nice gap up on September 6th. With 3.8 million shares, but that's being benchmarked against the level of downdraft from June 7th of 6.4 million shares. So 6.4 versus 3.8 million shares. That level should have held as resistance. The stock moves higher. So these windows, these open gaps out here, in fact, right now, if we take a look at where it's actually moved into, it's moved into a downdraft gap, which takes you to January 25th out there. Now, the volume on that downdraft was 1.7 million shares. Already today, though, it's got the volume behind it, 1.3 million in only 18 minutes of trading out there. So this is not a stock chart here. There are some stock charts where the patterns just simply don't really work that well. When you see that, you just kind of exit off your list. You want to find chart patterns out here that behave the way that puts a probability of a trade on your side. And I would say that the Men's Warehouse is not one of those stock charts. Let's go peek in on Amazon. That's the leader in the clubhouse on the way down. It's trading down about $7 right now. AMZN is the ticker symbol. And let's go see what another strong equity out here as well. So as we pull the Amazon stock chart back here, gapping down this morning, 750,000 shares. Looks like maybe it'll go ahead and make a run here for the swing point low, which is February 26th. The high of that area is 262, trading at 268.20. Should have no problem getting down there. Volume-wise, though, in only 20 minutes of trading, let's see here, 750. It's got some pretty decent volume here today. So volume, if it keeps up at this pace, is going to tackle that volume of 3.3 million shares on February 26th. But until it gets down to the 260-204 level, won't really be releasing any information to you. But you can take a look here. We've got Amazon. Amazon had come back and tested a little sign of strength, which was that gap up in, well, it wasn't a gap up in the marketplace on January 2nd. This happens to be one that occurred on January the 7th out here. Amazon did gap up into January 2nd as well. That level has not been tested. Well, the highs have been tested and have held. 877-927-6648. We'll be right back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow up 62 right now, Composite up 11, S&P's up 6, and we'll go back to Amazon here just for a brief moment. We can take a look at an area of support here, which happens to be this little gap up candle on January 2nd. Makes a lot of sense. We know that that is should be a strong area of support if and when the market ever decides to retrace. Eventually, the bulls will get a little tired and move off to the side. Eventually. I don't know when that's going to be, but eventually out there. If we take a look at Amazon, though, that January 2nd high, 258.10, 3.2 million shares. I suspect that is where Amazon is really headed to. Now, first time that it came back to that area, did it with volume, did it with huge volume, 10 million shares. However, it didn't break that area, came back and tested it once more with 3.9 million shares, 3.9 going against 3.2. It's a reason why this is a strong area of support. Haven't been able to bust that down even with volume coming into it. A slight close below it on February the 11th. But like I said, on those little windows out there, I'll go ahead and give them, a day just to close below it. If it gets back up there, I'll say, okay, the repair job, somebody had to run to the hardware store to pick up some caulk or something like that in order to really fix that window. So that is a level. You can see that level was tested again on the 26th with 3.3 million shares of February, tested again with 2.6 on the following trading session on the 28th out there. Looks to me like that is where Amazon is headed. Now, ideally, if Amazon can move back into that level on lighter volume, lighter than the 3.9 million, lighter than the 3.3 million, and most certainly if it can do it lighter than 3.2 million from January 2nd, you've got a nice little consolidation pattern here that you could play from that level right around the 258 all the way up probably to its highs. Well, you'd have to really use as a target here the March 12th level of 277 out there. But that is on Amazon. I wanted to take a look at Bed Bath & Beyond. So let's go take a look at this stock chart. BBBY is the ticker symbol, and just simply because it is coming into a gap out here. Just wanted to see what it is doing. This had gapped up back in a couple trading sessions ago, March the 11th. Did it with 3.4 million shares. Bearish candle yesterday, down with 3.6 million shares. The benchmark here looks like it's trying to tag and test, see if this area here will hold as a support. The area I'm referring to is the March 8th level. The high is 59.47, 2.2 million shares. That has not been tagged yet today, but looks like that is the area that Bed Bath & Beyond is headed for. We can see here that the last time that you had a move off of the bottom, and if we take a look at Bed Bath & Beyond, one of the things that I'm looking at here is take a look at this little hammer candle right here at the bottom. And it is a little one, most certainly. And what occurred on these three candle sessions right here, not this one. This one here is not a hammer candle. This was a big gap down back on December the 20th. It's a high volume low. Wasn't totally tested. You would have liked to have seen this tested. What I mean by that is the low, which was 54.33. It was not tested. You had the bulls actually show up right here. First time that we saw any bulls was right here on this candle, which is December 31st. 1.9 million shares created that little bullish engulfing candle right here. So what we can see, no matter what, with regard to where the bulls are hanging out in Bed Bath & Beyond, I'm just going to draw a black line across my chart out here because, and I'll put the RSI on this just to I have not looked at this stock chart. Just received I received a little alert message from one of my scanners last night to just simply peek in on this stock chart out here. So we can see that where the bulls are hanging out are really at about I'd say the low is right about 54.62. My goodness, time just simply flies. Not able to fully analyze Bed Bath & Beyond for you. But, folks, have a great Thursday, and always remember, you have an amazing power within yourself, and that power is so strong it'll create a life of abundance, cure incurable, paint magnificent masterpieces, but most of all, folks, create fantastic, loving families. Thanks for being a part of the TFNN family. Have a great day. Look forward to seeing you soon. Take care, folks.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.